It's an everyday thing. It's an everyday thing. It's an everyday thing when you let your nuts hang.
Do you use part of your home for your business, such as a home office daycare business? Yes. Yes. I'm telling you, most people who will be using this probably do have a home business. You don't have an office. If you have an office, you need to go see a real CPA. Alright, so home office description, just, name it bedroom or third room. Would you like to use the simplified method? No, we don't want to use the simplified method. We want to put in all this information because we want to be able to maximize our return. Alright, square feet of the area used for business. So if you have a 1,800 square foot, and let's say if you use 25% of that, that is about 450 feet. And we're going to say 1,800 square foot home. Do you own your home that is used for a business? Yes. You must own your home. Was a daycare part of your home? Yes or no? You know what I'm saying? Also, if you use the simplified method, you won't get this. This is what I was talking about. You will not get to put all this information in. Okay? So the direct expenses are expenses used specifically for your office. Okay? And indirect expenses is for stuff that you use for your home, but it affects your office space. Okay? Come down here. This is where we're going to come down here to repairs and maintenance. Okay, so repairs and maintenance. Basically, whatever you had to do to upgrade your office space. Did you have to paint the walls? Did you have to add a ceiling fan? Did you have to change the windows? Or add any different monitors? Or or put stuff on, hang things on the wall? This is where this goes. You know what I'm saying? If you had to pay somebody to hang TVs up, or you had to, the cable company charged you because they had to come put another jack in. All that stuff goes in here. So we're gonna go 500. All right, you shouldn't have rent because this will be in your home. You know what I'm saying? You shouldn't have rent. After this, there's no more. You don't put nothing. You can put whatever other expense you have, but if you don't have anything, just move on. To enter in the cost of your home before using business, and enter. Okay, so the cost of the home is $120,000. The value of the land, we ain't gonna put no value for the land. Did you sell your home in 2020? No. All right. Home office depreciation. Third room, $769. All right. Do you need to? No. Vehicle expenses. Do you need to enter in a vehicle expense for Schedule C? Yes. Alright, so let's put in Ram 1500. Big dog. Automobile under 6,000 pounds. Alright, so if you have a automobile that is a heavy truck, heavy SUV, or over 6,000 pounds, that is a tax write-off. Okay, so I mean that's a bonus. That's why you see a lot of people doing that. Did you date, place, and service? Did you purchase this vehicle new? No. All right, business miles. All right, commuting miles. We ain't gonna put nothing there. And then average daily commute miles. Was this vehicle used for hire? No. Do you have a vehicle for personal use? Yes. And read it and go through it and answer it, honestly. Alright? And do you own or lease this vehicle? Own. Enter any business parking fees or tolls. Man, I got so many. I'm waiting on one from Texas right now. And car loan interest paid. Now, however much you paid on car interest. So, our federal return is still 0. Let me show you how this will change. Alright? I'm going to go back to the income, right? And let's say the income was $50,000. This is going to change automatically. Woo! 6,000. Oh, let's go back. All right, so I changed our income to 2,000 so I can show y'all where this changed. All right, when we go to this vehicle expense, home office expense, watch me delete this third room and watch how much it goes from 523 to 783. So I'm telling you, all this stuff that we putting in is saving us money. We got 783, and you see I just deleted all that stuff off of there and made it go back. This page. Edit. Alright, so we're gonna turn that. Look at it. Made everything 0. Now, see, when you take all these numbers out of here, your taxes just goes up. But remember, these expenses is all write-offs. That's why they say, I'm using this as a tax write-off. I'm using this as a tax. This is what they mean. Our tax return, our taxes owed is $22,000. It was, earlier just fine. So we was at 0. So now we're gonna go down to depreciable assets. Now I'm gonna show you how we're gonna get the 2,000 down to 0 doing depreciable assets. Okay. All right. Do you need to enter any depreciable assets for your Schedule C? Yes. Okay. All right. So this is what we're gonna put in. Let's start with MacBook. Most expensive thing put in service. All right. 0101. Let's say we put this in 2019. So it's gonna accrue. It's gonna give us an accrual method of depreciation, right? All right. Let's go data dispose. Amount of percentage 100%. Original cost $1,200. Save and continue. It's a computer. Okay. Computer. Alright, so basically what this says is if you made any expenses to your laptop the prior year, if you did not make any expenses to it, then whatever. But if you did, this is what you would put in there and they would give you an amount. Okay, so I'm for sake of science, I'm gonna put 0. Okay, so now we at 2062. Now you can did you take the one-time bonus depreciation deduction for your MacBook that was placed in service in 2019? You can put yes or no. Okay, and then you can put in the total amount that you want to expense. So 240, put in 180 on here. If you put in any number other than that, it's gonna give you some bull crap. So just put in these numbers. Okay, the depreciation method and recovery period for this asset are listed below if you want to make any changes. So look, now we at $2,091. All right, we at $2,091. All right, now let's add in another one. Let's say a GoPro. 0101 2019. Did you purchase it new? Yes. 100% of the business. Original cost, I think it was like $300. And okay, it's a computer, cell phone. All right, camera. Okay. See, now we went down from 91 to 64. All right, we didn't take any depreciation last year at 179. Did you take the one-time bonus? No. And then we at 2064. Let's go ahead and add 43 in there and 32. Oh shit, that didn't really do nothing. We went up. But that's not a big deal. Don't worry about that. Okay, so let's add in a desk. Okay, so 100%. Original cost $1,500. And the maximum amount you can expense is $1,500 on this one. So what you want to expense it? Bam. Look, we down to 1637. I'm gonna show you this. I'm gonna show you where we could do some edits, man. So when you do your timeline, so let's play 2020. Save and continue. 679 computer. Alright, so now it's giving you the option right here, because this is a new unit that was purchased in 2020, which was recently, and now you can expense that whole thing out. Look, it's saving us more money because that's a new purchase. See, everything was in 2019 was old, so they didn't give you the option. So everything you purchase new, they give you the option to, depreciate the entire product. Like, it makes it so much easier because over years you're not gonna keep depreciating these things. You're just gonna put it in one time and go. You're gonna forget about it. Entering this stuff in every year is gonna become a pain, but you see how it is. All right, so let's go to generator. All right, date, place, and service. All right, 100% is used for the business at $900. All right, save and continue. And tools, and you can write off the whole thing, 900. And now we down. Let's go with some really expensive equipment. 0-turn mower. Now, if you have a more specific, you can put that. Okay, 100%. And this was $5,000. All right, let's see how far we can get this thing. Pretty much. Now we down to 1,000. All right, 1,058. We're gonna expense this entire thing. We have 468. You know what I'm saying? So, this is what I'm telling you. You gotta do. This is where all the happiness begins. When you in your own business, you have a small business, and most of your expenses that you make throughout the year need to be deducted. So this is where you do all this. All right. So I've already shown you. We went from 2,000 $200 to now owing only $468. We done did all of Schedule C. Man, that's amazing. All of Schedule C.